Everyday people working 9 to 5, saving up that money, trying to survive, investing in the future, trying to be wise, you gonna be money hero. Yeah.
Hi, I'm Nick Johnson, host of Everyday Money Heroes, and I've reached early retirement. I'm here to provide information on how to obtain financial independence and inspire you through sharing stories of everyday people who are turning knowledge into freedom.
That hustle, always reaching for the sky. We're gonna be money heroes, never gonna shy.
Hello and welcome to Everyday Money Heroes, where we provide information and inspiration to people of all ages to take control of their financial journey. I am your host, Nick Johnson, and today we're going to discuss emergency funds. And before we get into that, little housekeeping, if this is not the first time you've come here to check out one of our episodes, I want to thank you very much for that. But if you have not subscribed, I just ask that you would take a second to either click that subscribe button on YouTube, or if you're listening to this on a podcast, that you would just go ahead and click that follow button there. It would be greatly appreciated. If this is your first time joining us here, welcome. And at the end of this video, if you find any value in what I've shared here, that you would do the same, that you would click subscribe on the subscribe button on YouTube, and that you would click follow on the podcast platform of your choice. So let's go ahead and get into emergency funds, what it is, the importance of it, why you should have it, and where you should keep it. So let's go ahead and kind of start off with a case study or a scenario of sorts, a cautionary tale. All right, so our cautionary tale is about Nick. Nick is driving home one day from work, and all of a sudden his car stops working. He pulls over to the side of the road. He needs to figure out what to do. So he does not necessarily have the money right now, to get a tow to figure out what's going on. So he calls a friend. Friend picks him up, takes him home. He goes and he tries to gather himself. Um, 2 days go by. He's like, hey, you know what? I really need to go get my car from the side of the road. Nick goes back to where he left his car, and he no longer sees it's there. And so Nick has a feeling that I think my car got towed. So he makes some phone calls. He actually finds out that his car has gotten towed. So Nick is in a bad situation because Nick does not have an emergency fund. And there are daily storage fees that are accumulating on his car. And so originally the tow was only $200. But as the days go on, Nick realizes that he's being charged a storage fee for his vehicle. And so in this particular situation, Nick is trying to figure out how he can go about getting his vehicle. And Nick says, hey, you know what? I don't have any cash, but I do have this credit card. So Nick decides to go ahead and he pays for the fees on the credit card. He does get his car back. Okay, so why am I sharing this story? Well, originally, if Nick was in a good situation, when his vehicle stopped running and he had to leave it on the side of the road, he could have instantly called a tow truck to come get his vehicle. He would have been good. Now, granted, it would have been even better if Nick had some type of roadside assistance, whether it was AAA or some type of add-on with his auto insurance, which would have been great, which is a form of insurance, but he didn't have that. And so at this particular point, Nick went ahead and he had to put that tow fee from the city and the storage fees on his credit card. So let's talk about credit cards in general. According to bakerrate.com, the average credit card rate is 20.12%. And if Nick goes, he makes the minimum payment on his credit card, it will take him 25 months to pay it off. And let's say, for instance, it was $500 once the tolls and the fees and all this other stuff. So at the end of the day, it would take him 25 months to pay it off. And at 20.12%, he would pay $614.19 for this tow. Okay, so that's why we really harp and focus on the importance of an emergency fund. When an emergency happens, whether it's a breakdown of your car, a water heater going out at your home, something happening with a child and you having to take them to the emergency room with the doctor, you have funds set aside for that. So that's why it's really important to have an emergency fund set to the side. Okay, so we're going to talk about that. So, what exactly is an emergency fund? It's really simple. An emergency fund is literally just money set aside that's easily accessible only for true emergencies. Okay, like we said, water heater going out, something happening with your vehicle, um, something happening with your kid, and you have to take them to the doctor. Those are emergencies. Um, it's important that when we have this emergency fund, we don't put it in an investment account. Okay. It is a financial safety net. Okay. So you may hear some people say, hey, you know what? Well, you can take those emergency funds, put in a Roth IRA. You can take that money out because it is your contributions, and it'll be okay because there's no penalty to do that. Yes, you could do that. Okay. But we like to keep things simple here. And so when we keep things simple, we're simply going to take that money, we're going to set it aside. Okay. So that's literally what an emergency fund is, money set aside for an emergency. Okay. Why does an emergency fund matter? First of all, an emergency fund gives you peace of mind. Okay. It reduces the stress by knowing that you are prepared. There are certain situations. I have been in my life as a very young adult, and I'm sure there may be some of you out there right now who are thinking that, what happens if something goes on with my car? What happens if there is a need for me to do something for my child, if they go sick and have to take them to the doctor, and I may not have insurance or I have an insurance policy that has a high deductible plan. And so I have to go ahead and pay for those services. Okay. So it gives you peace of mind. Also, it stops you from relying on credit cards. I've already mentioned that the current average credit card rate is 20.12%. And so if I can get 20.12% on something, it's amazing. I don't want to have to pay 20.12%. Okay. So those credit cards are extremely high. Now, granted, you don't pay those fees if you pay it at the end of the billing cycle, but most individuals are not able to pay off what they accrue on their credit cards at the end of the billing cycle. So we want to stay away from those if we cannot do that. Also, it frees us up from having to do things like payday loans. There are actually still people who pawn things, and so if you're not aware or know what pawning something is, like literally you might have a television, you take it to a pawn shop, and they might say, hey, you know what? On this $1,000 television, we might give you $100, and you have 30, 60, 90 days, whatever the terms is, to pay it back. If you don't pay it back, then you lose that television, or you have to go and pay some type of fee to keep the terms extended so that at some point you'll be able to get that television back. Okay, so we want to keep you away from doing those things. It keeps you from raiding retirement or investment accounts. There are some individuals who I know of for a fact who have been saving in their 401ks and things like that, but then they encounter some type of emergency, and the only type of savings that they have is in a 401k. So they go and they pull the money out of the 401k. When you do that, then you're forced with having to deal with those early withdrawal fees and the interest not compounding from those things. So we want to try to avoid those things. And it just gives you some flexibility. So as I said before, it helps to cover medical bills, car repairs, um, job loss. Let's talk about that. We really don't know what may happen in certain situations when it comes to our occupations. Okay, there is, right now that individuals are losing their jobs. I have another video here on this channel where we talk about what to do when you're faced with job loss. I will link that in the description below. But what happens if you lose your job and you still need to cover the bare necessities? You still need to possibly pay your rent or your mortgage. You need to be able to provide food, gas for your vehicles, or if you have a gas vehicle. Also, there's a lot of things that you need to take into consideration. So once your job is no longer there, you need to have that safety net to continue to support your family while you go out and you find a new occupation or a new job. You might be wondering, okay, I understand the importance of an emergency fund, but how much do I need? That's kind of there's a lot of things that go into that. First of all, kind of some of the guidance is that, hey, you know what, you should at least try to have 3 to 6 months of living expenses. So that's, hey, you know what, that's why we talked about previously. Okay, how much does it cost for you to live per month? And we talked about, being able to calculate your retirement numbers and things like that. That's why it's important to understand your monthly spend. So if you know that, hey, you know what, it costs me 3,000 a month to live. So you know that, okay, if I do 3 months of an emergency fund, that is $9,000. If I say I do six, that is $18,000. Really simple. Okay, that's why it's important for us to know how much we're spending. So if you have not done that, I encourage you go back, take all of your credit card statements, um, things that transaction, whether it's Cash App, Venmo, whatever it is. Go back, look at that, see how much you're running, get about 3 months worth of that, average it out. Then that's how much your living expenses are. Make sure to include things like your rent, your mortgage, things like that. Okay, and that will kind of give you guidance. Situations where you might need more than 3 to 6 months is when, say, for instance, you have a very niche occupation. Okay, and what I mean by niche occupation, for instance, in my professional career, I was a computer programmer. There are many computer programming jobs out there. There's a good chance that I might be able to get employment again in say 6 months. I would like to think that if I had to get another job. But there are some other individuals who have very niche occupations. Say, for instance, you're an archaeologist. Yes, an archaeologist. And say, for instance, you might work at your local science museum. Your science museum decides to reduce their staff or make cuts, and you're impacted. There aren't tons of archaeologist jobs around. Okay. So you might have to relocate. You might have to go into a completely different industry or a different field to get another job. So who knows how long that will take? Okay. So in those types of situations, I'll say, okay, don't just stop at 6 months. You might actually need a year's worth of emergency funds to allow you the opportunity to be able to go out and get another job in that field. Okay, so if you have a very niche, very specific job occupation, kind of keep that in mind. If you're someone who something that's kind of a broad occupation, like I said before, computer programmer, customer service, just general management of people, you might be able to get something quicker than that. Okay, so you want to do that. Um, Also, you might say, hey, you know what? It is too much for me to be able to save 3 months, 6 months, a year. Do something. Okay, so you want to do something. Okay, you might not be able to get, 3 months, 6 months, or a year. Just start with something. It's going to put you in a far better position than you would have been if you didn't do it. Okay, so now that we understand the need, what emergency fund is, let's talk about where to keep it. Okay, we should have it in a completely separate account. Okay, so you might have a regular checking account, you might have a regular savings account. We don't want to necessarily commingle these funds. Okay, I suggest having a special fund for it. So just go ahead and literally you can call this emergency fund. Sit this money over there to the side, preferably in a high yield savings account. Okay, so right now rates are still around 4%, which are really great. So go ahead and have that money just over there to the side. Okay, so you want to make sure to do that. So you don't want to go ahead and you don't want to invest into the stock market. You may be saying, hey, I heard if I invest in the stock market, you're just saying 4%. It's a possibility that if I invest in the stock market, I heard that average return on the stock market, 8, 9%. Why would I do that? That's true, but sometimes there are down years in the market. So what you don't want to do, well, there's a couple of things you don't want to do. First of all, you don't want to go ahead and invest in those funds, and there is a pullback in the market. So you might invest, $1,000 into the market. A situation might come up, and you might be in the middle of one of those pullbacks. So instead of having 1,000, you might only have $900. Okay, so then you have to deal with going and getting those funds and it not being all there. Okay, so that's the biggest thing. And then the second thing is that if you have an emergency, you want to be able to quickly access those funds. Now, if you have them in the stock market, you can sell those funds. Then you got to wait for it to settle. So it's not immediate access. So you might have to wait for the end of the market. Then you got to wait for the funds to settle. Then you get access to it after a day or two or something like that. You want immediate access to those funds because it's an emergency. So you want to make sure to do that. So you want to make sure to do that. So go ahead, find yourself a high yield savings account. Typically, you can find those. There's a lot of places that you can go. Bankrate.com is a good resource to be able to find the rates on high yield savings accounts. Also, you can go to Nerd Wallet is a good spot as well. So those are two places that you can go to find high yield savings accounts. You just want to make sure that those things are FDIC insured and things of that nature. Typically, I leave our high yield savings fund actually in a separate account, but in our brokerage account because they have a high yield there as well. So if you do have a brokerage account and a taxable account, go ahead and look and see if there is a money market aspect to that. You can actually get some high returns there as well. Not high returns, but some competitive returns. Okay, so first of all, you want to make sure to automate that. So the best way to build up those funds is to have it automated. So go ahead and just set up, once you get that account identified, or you can do a Wealthfront, you can do a Fidelity, wherever you decide to go. Once you decide to identify wherever you want to get those funds at, you want to automate it. Okay, so I suggest just go ahead and saying, okay, if you get paid, every week, bi-weekly, however you do it, go ahead and saying, okay, I'm going to go ahead and get X amount of dollars every month or whenever I get paid. So you say, okay, I'm going to get $100, $50, whatever it is. You're going to do this on a routine basis. Okay, you want to have this money come out directly and go directly over to that account. I suggest not having a checkbook for that account. You can have a debit card, which is okay, but what you want to do is like you don't want to use this for anything other than emergencies. Okay, you can start small, as I said before, 10, 25, $50, wherever it is, do that. If you happen to have any windfalls, like tax returns, bonuses, maybe even like side hustle income, feel free to put that money over there. Because first thing we want to do is stack our emergency fund. Because in the next few episodes, we're going to discuss the kind of order of operations when it comes to the accounts that we need to fund. So we want to make sure that we get our emergency fund situated where we can go ahead and have that money there if something happens. Okay, so we want to make sure to do that. So let's talk about stuff we want to avoid. Okay, first of all, what do we want to avoid? We want to avoid using it for non-emergencies. Okay, it's called an emergency fund for a reason. We don't want to go ahead and use it for vacations, shoppings, and just kind of general wants. We don't want to do that. We want to make sure that we are focused on the primary purpose for that. And the good thing about emergency fund, once it's done, it's done. We no longer have to fund that emergency fund. We can check that off of our list. We no longer have to do that. Okay, so we want to make sure that once we have our emergency fund funded, is good. So you may say, okay, I want to do 3 months, 6 months. Now, if you want to go ahead and kind of push that out, if you want to say, okay, I got 6 months, but maybe I might want to do 9 months, okay, or whatever. If you want to add up some additional funds, that's fine. But understand the good thing about emergency fund, once it's there, it's there. And the only time you should have to make any other contributions once you identify how long of a runway that you want on your emergency fund is when an emergency actually happens and you have to use that money. Okay, so other than that, you can go ahead and then we can start focusing on other stuff like debt reduction and investing. Okay, so that's what I want to do. You want to keep it in cash, as I said before. We don't want to put in investments. Also, I suggest not actually having it around you in the house. Okay, so what we don't want to do is just have stacks of this money just kind of sitting around the house. We don't want to have 6 months worth of living expenses just in a shoebox up under our bed. That's not what we want. We want it in a account gaining interest, okay, but we don't want it around like that. And we want to make sure we are focused on that is just for emergency situations. Okay, so um, why does all that stuff matter? Okay, so first of all, what we want to do is that we don't want to compound an emergency, because an emergency gets worse when we don't have the money to deal with that situation. So that's why an emergency fund is extremely important. Okay, so we've talked about several things. We talked about what an emergency fund is. We talked about the importance of having it. We've talked about where to store it and when to use it. Okay, so first of all, just kind of our call to action here is that we want to build an emergency fund. It isn't about how much you make, it's about building resilience with what you have. Okay, so we want to make sure that we want to have that emergency fund there and that it is there for us. And so we want to start your emergency fund today. If you don't have one, even if it's just 10, 15, $20, your future self will thank you when that situation happens. When you have a tire to go out, or when you're driving your car and all of a sudden it just completely shuts off, or you have a child that has a situation that goes on where you got to go to the dentist for some type of emergency. So your future self will thank you for what you're doing right now. Okay. So that's what we have today on emergency funds. I want to thank you for your time and your attention. If you have made it to the end of this video and this is your first time, as I said at the top of the video, I ask that you would either subscribe on YouTube or follow us on your podcast platform of choice. Once again, I am Nick Johnson, your host, reminding you to trust the process. Have a great day.